We've come to you on many different occasions this year talking about the headwinds that we've seen in the economy and not quite understanding why equities made fresh record high after record high, even if it was just in a concentrated handful of stocks. Now, going forward, we think that these headwinds that we've discussed all year, whether it's manufacturing, whether it's the consumer, whether it's lending conditions, whether it's business confidence or business spending, housing that's been at a standstill, all of these headwinds, unfortunately, are starting to collide now and collide pretty quickly. And people are finally starting to realize and hear what we've been saying, that the economy is not as great as the equity market valuations would suggest that it is. So what we're seeing is volatility pick up. We're seeing a very big pickup in the VIX index. We're seeing that cash that we've had sitting on the sidelines for most of this year is finally giving us some exciting opportunities to put to work. We won't jump, though, quickly just because you have 2 bad days in the market. We are much more focused on long term. Let's remember the market, even though it may have looked ugly over the past few days of what we've seen to start off the month of August, we're still sitting near record highs. We're not really even seeing a full 10% correction, and we're surely not in a bear market. So we think that treading lightly, looking at those areas that have fallen the most, that are giving you the reward for the risk, they're the ones we may start putting our toe in the water for. But we're going to still keep dry powder, even if the Fed cuts rates and we're not getting that full 5% on cash. We're going to do this slowly. We're going to do this methodically. We're going to do this with appropriate due diligence on all of our managers because we got this. This is a cycle. We've seen corrections. We've seen bear markets before. They're healthy, they're normal, and they're surely healthy when you look at some areas of the market that have had valuations like the dot-com bubble. And in comparison to the dot-com bubble, we haven't fallen anywhere near we did then. And we see so many similarities between what's been going on this year with those Magnificent Seven and what happened in the dot-com bubble. So again, we're being patient. We're looking for the opportunities for the cash. We will likely be putting some to work, but we're going to do this slowly. And all of this will dictate how the economy continues to pan out, as well as valuations, and making sure that our clients are given the best reward potential with the risk that they're taking for the long run. Thank you very much for listening. If you have any questions, please feel free to reach out to your financial advisor. And we also ask you to subscribe to the Markets with Megan, where we give on a regular basis these short-term blips about what's going on in the market from an economic standpoint, as well as what we're seeing from an equity movement and bond market movement.